everyone, hope you guys are having a great day out there. Welcome back to the Capital Mindset Show. Today we're going to be talking about PayPal. PayPal won the vote in the Discord community, which is free to join, by the way. And you can join in the link down below. You'll have to answer 3 questions to kind of do a vetting process so we don't let spam bots in the community. But aside from that, PayPal won the vote. There's actually a couple others that were the runner-ups. So I'll be covering those as well. There's actually a lot to talk about, a lot of chips, stocks, Amazon, we got to talk about Amazon. So, and maybe even Google. We'll probably get to Google as well. But you know, I'm having a lot more time more recently than before. Work's kind of a little lighter, so I'm going to take advantage of this and provide a lot of content for you guys. And there's so much because this has been such an eventful week. So PayPal reported earnings this week, and I'm guessing that's why it won the vote. So taking a look at the price action here today, we're going to go over the earnings as well, but price action here today, it is down 2.99% today as of filming this video. And you can even see the time that it's being filmed. And let's take a look at the 6 months. You can see it's performed very poorly, 61.37%. And this is I think a crowd favorite, I guess. Over the 1 year, it's down 66%, but from all-time highs, it is down 71%. So it has come down drastically, to say the least. And so this is the 5-year performance. It still has done pretty well over the past 5 years. And I think it's, if you take a look at the max, it's done 157. So, and it IPO'd around here in 2015. So it's done fairly well. It's spun out of eBay. Those of you who have familiarity with PayPal, you know, let me know down in the comment section below. Do you like their products? Do you trust them? Because that's the pillars that require PayPal to be successful. Trust. And actually, looking up here, it is a red day today. But regardless, you know, we don't. I've been having a good time. For example, NCR was actually added to the portfolio when I made the video. Of course, a small percentage of the portfolio. You can see the comment that I made down below, and I pinned it to the top. But NCR is funny. Is a fun stock. There's rumors that they might get bought out. That's why they're up today. If you were wondering, I actually updated everyone in the Discord community. So. With regarding to PayPal, though, or other stocks that are reporting this week, you know, it's been mixed. Again, we're going to cover those guys. But looking at the earnings here today, we'll actually take a look at what's been going on with PayPal. So they are showing some growth in users. They are showing some growth in transaction amounts per user. You know, total payment volumes going up. That's very important. So 323 billion. And we'll get to the risks at the end. And then remember, we're going to view or kind of listen a little bit as to what I did say in the past, because we got to hold myself accountable too. And I'll tell you this, my opinion hasn't changed too much. However, the price has definitely changed. And so that can change my current conclusion about acquiring PayPal. Okay, that's just like a hint. All right, and then $1.1 billion in free cash flow, 32% decrease, but 16% of revenue. Okay, fine. Now let's actually move on to the next slide, and we can see, okay, active accounts. This gives us a good picture. I like when management does this. Very easy to kind of tell the story here. Active accounts is growing, but remember Venmo, right? Remember Venmo. So Venmo is pretty easy to use. Some of my personal clients, they might use Venmo here and there. And I try to tell them to use Zelle instead, because Zelle is free. They don't have to pay a fee, but they like to use it with their credit card. I don't know why. Yeah, they like it. And then, you know, there's the PayPal aspect, which, by the way, there's stuff like Stripe, which is actually cheaper. I use Stripe. Stripe for me is better. And even my bank is actually producing their own variations of this that are even going to be even cheaper. So that's the added risk. And if I, you know, as a consumer can just go to my bank and just have it all in one place, I don't really care. It's great for me, okay? I don't really care. But depending on the merchant, depending on what it is that you're doing, each service will be different for you. So just keep that in mind. My anecdotal evidence is not something that we use. And I think I've showcased that I'm very careful about that, especially when I was doing the Netflix video or the Netflix analysis. We have to be careful with anecdotal evidence, and I try to not use anecdotal evidence at all. All right, remember, if we go to a Target store and we see a very special food, you know, that doesn't mean that the company is a buy, right? That's anecdotal evidence. It's a fool's way of doing analysis. All right, anyways. It's a good way to pick out a stock that might be, but it's not the analysis itself. So you see, okay, I'm going to do more research into that company because I'm seeing it every day. So Venmo, if you saw Venmo back in the day, you're probably like, okay, I'm going to do more research on Venmo. And then you do your own analysis. You look at the data and see what it tells you. All right, so consumer merchant and consumer merchant. So this is their timeline. So you can see all the products that they have now. So nice to see that. Merchants, okay, so you see Venmo, there's Venmo. Venmo's, I think, the biggest growing part of their business. So Venmo checkout for merchants, Venmo for consumer. See that they're trying to create this ecosystem within the PayPal platform, and all well and good. And I think there's a lot of potential here. There's a lot of competitors, but there's a lot of potential. We can see some of the merchants, some of these merchants that they wanted to showcase. Revolve is very good, very popular among women. My wife actually buys from Revolve quite often. Gymshark, one of my buddies buys Gymshark. I don't care about gym clothes. They're meant to get dirty, so I don't really care, but some people do. Levi's, sure, and then, okay, return bars. Okay, cool. All right, Revolve. Okay, you're highlighting Revolve. That's probably cool. ESG, okay, pat on the back. Slides, I don't really care, don't care. Support, I don't, oh, okay. I'll, because this is an emergency. I'll show, good job, good job. Okay, business updates. Okay, payment volume, total payment volume, pretty good, pretty good. Total payment volume increased 13%. So this is the decline in growth. Makes sense though, because we were growing from smaller numbers, and 2020 and 2021 were incredible years. A lot of demand was brought forward. There's a lot of businesses that we've discussed on this channel that they brought forward a lot of demand, and a lot of people forget that in their analysis. We've talked about some of them, said those were noob tier analysis that some people were doing on some of these stocks, and they were missing out one key detail that didn't take a genius to identify at all. So in this case, PayPal was another one that, we'll see what I said in the past, but yeah. All right, so we're kind of finishing us off here. Okay, cross-border transactions. This is where Stripe actually really shines, or TransferWise really shines, and I think now it's just called Wise. It's very easy to use. And then if you combine Wise and Stripe, you basically have what PayPal does, except it's cheaper, way cheaper to do it that way. So just so you guys know, and it's very convenient. It's very easy to use. Okay, so we're going to skip over some of this stuff because we're going to look at it in the models. All right, so just again, let's go over what I stated here. So I'll kind of like summarize it, but you can look at this video if you want. It's when the channel was actually smaller, and it still got a decent amount of views for the size of the channel. And it was posted on February 9, 2022. And this is actually, do you see this? Revisiting PayPal. So it wasn't even the first time I had spoken about PayPal. Most of the time, each time I spoke about PayPal was fairly consistent opinion. If not exactly consistent opinion. It hasn't really changed, and it still hasn't changed today for the most part, but we'll actually observe some of the changes that might be there because the price is lower. So I have to do this. Now, this video was actually made in response or in conjunction to another creator's analysis that I warned my audience, or I told my audience was extremely surface level. And you guys, I won't mention the person's name because, whatever, but in this video, I do cover that person. And it's, let's just say I get into a whole spiel about enterprise value to EBITDA, as an analysis for buying stocks. Okay, we're not going to get into that. But if you have any comments, questions, concerns, you can comment down below, or come to the live streams, and you can ask the question live, and I'll get to the question. And these educational questions, when you ask something that's difficult like that to explain, I love those, and I'll get into those. All right, so going into something like PayPal, I kind of stated you can see the price targets, or not price targets, I don't like to use that word, but buy prices right there in front of you. And those were based on the analysis at that time. Okay, we are going to actually take a look at it today and see if anything's changed. And for the most part, I said it wasn't a buy at the price of $123.77. So let's remind ourselves where that was. So that analysis was, again, around February. Where are you at, February? Yeah, around here. It is around there somewhere. Yeah, it was literally actually around here. So since then, it is down 27.21%. And now we're going to judge it on today's price on the same probabilities that, might benefit from, okay? That was broken English there, but all right. So let's actually take a look. So this is from my DraftKings video. If you haven't checked that out, go check out that DraftKings video. But essentially, I shared my thoughts on that. PYPL. Okay, so while this is loading in, which I think it should load in fairly quickly, we're like right there. All right, so this implies an 88% upside according to analyst price targets, and we are taking a look at the price here today, 89.19. I'm not actually going to discount it like that. We do see that the buybacks actually have ramped up, because if we take a look at the older video, the buybacks were actually less. So they actually ramped up the buybacks, which makes sense. Now we're going to be the judge of that. When we are investors, We want to actually judge management's allocation of capital. And if they allocate it in a way that we don't agree with, that actually means that we probably shouldn't. It's okay to not want to invest in a company just because you disagree with management. Just it is your opinion. You could actually be wrong, by the way, but that's fine. Don't invest in something you don't agree with. So I have to actually mention this in the Intel video, which will come out when I get to that one, but that one is coming. All right, so just on a bird's eye view, ignore all the growth rates because we're actually going to just delete these because we don't really care about them. All right, so we are seeing good return on assets, good return on equity, good return on invested capital, indicative of a good business. Actually, in the Altman Z-score does indicate that, not it's not sure whether or not it will or will not go bankrupt, but I would lean on that it's not going to go bankrupt. And the Altman Z-score is best used for industrial companies, but the model's own measure is actually saying doesn't know either. So good to note there, but it's probably indicative because it's a financial services company. So let's take a look at the ratios and kind of get an idea for how healthy this business is. And we're taking a look at the liquidity ratios. They look pretty good. Solvency ratios look pretty good. Well, they're getting worse actually. Yeah, they're getting worse, but that's fine. They're going from a small base, and actually, let's remove these years because that's all clutter. So, yep, it's getting worse, but still not crazy. Still, gross profit margin. This is getting worse from 2017's metrics, but better from 2018, 2019, 2020. Operating margins, net profit margins, ROA, ROE, all well and good. ROIC, all well and good. Earnings quality, pretty good all across the board. And yeah, no, it looks pretty good, to be honest. All right, so looks like a good company. Let's take a look at back here. All right, so what are some growth rates that we could probably assume? Let's actually remove this for now. And then we'll get back to that. Let's actually start discounting it first at the 12%. And then we'll actually see, let's go by reference, so 20 to 10. Okay, so 20, 16, 13, 12, 10. 20, 16, 13, 12, 10. All right, so essentially what's clearly happened is some form of deterioration. Let me see, because right here, we're discounting it, and yeah, so it does appear that there was some form of deterioration in some capacity because it's actually detecting something that's so we're kind of going to redo this analysis right now. All right, so right now it does appear that it is cheaper on a PE basis. It's cheaper actually on a price to free cash flow basis. It's sitting at just under 19 now. We are going to assume some levels of growth. They grew at 26, so we're going to assume, let's say that they can somehow do 25 on the higher end. And we're going to use the custom weighting, yes, of this. So this is going to be weighted the least. And then we're going to do that one there. We're going to change that to 15. And then we're going to change that to 13 and then keep that at 10. All right, so we are basically in between 20 and 25% assumptions with only this. And then let's put, again, the 61.61%. If we do assume buybacks do continue and manage to continue for here to the foreseeable future, that is interesting. Now let's take a look at what analysts are estimating in terms of performance. So revenue is expected to decline actually from 2021 to 2022, and cash flows are expected to actually grow. Shares outstanding are declining, so they are beginning that process of buying back shares. All right, cool. That's all well and good. So what I'd say is, for me, I'd still prefer that greater margin of safety. And if you believe, for example, that the company will grow at around 25-ish%, it's not a terrible deal right now. But the thing is, will it grow at 25%? I have no idea. It's definitely a better price than it was before. It's still not at a compelling buy point for me. Again, it kind of stands here where these growth rates were, I guess, outsized at the time for that moment in time. But we are actually taking into account a greater proportion of growth happening more recently. So again, that's why the growth rate is a little bit different there. All right, so it's kind of skewing that, and the likelihood, I'd actually say that it's more likely to grow in this range, if I'm being honest. So that's why it actually is more skewed, you could say. I'm weighting it heavier to this side because I think that it is possible in the future they do grow around this range. They could grow, I think 20% is still feasible, but I think 20% is pushing it towards the higher end or the higher points. Okay, so yeah, that pretty much covers PayPal. PayPal is, again, a good business. I'd say that depending on your margin of safety, though, because if you don't actually require that much of a margin of safety, you could make a justification for acquiring shares now, not before. Before was not a good time to acquire shares, and that was the opinion here. That was the opinion before. So I wouldn't really acquire shares until now. Okay. So if I was interested in buying PayPal, this is actually my strategy that I would be implementing at this moment in time. And then I'm going to finish off with the risks. Okay. So just conclusions and then risks. So with the conclusion, I'd say that I'd be nibbling in here now, just building a position up. And then if the market does present greater opportunity, I then will start building the position up more. But I won't be aggressive here. I would start, but this is where I'd start. Okay. If I'm being honest. Now, why am I not buying PayPal? Well, because for one, I don't like businesses in which there's a race to the bottom. So I'm the consumer of these businesses, and I want the cheapest, best everything, okay, regarding this service. Basically, I want to move my money from point A to point B, and I want it done cheaply. I don't care really about that. And I want it done securely. So if someone can do it more secure and cheaper, they're going to get my business every time. And in my area line of work, I pretty much get to decide where I receive the money from, okay, or where I get the money from. And I will not usually like to pay those toll roads. So in the case of those people that I mentioned that do pay me on Venmo, they pay me on Venmo, but I accept it because I don't pay anything on Venmo. So they decide to pay, but that was their choice. And even though I tell them to use Zelle, but when I pay, I will use Zelle. I don't care. I will use Zelle, and I'll pay people through Zelle. Or anything else that has lower toll fees, okay? And I think most consumers probably ought to think that way. If they don't think that way, I think it's pretty important. But then there's the other aspect of PayPal, which is security. But again, you have a bunch of competition in this space, and it is a race to the bottom. It's not a type of industry I tend to like, and it's very easy for larger players to kind of just fully vertically integrate this in. So think of Apple Pay. Think of Starbucks. Starbucks has their own app where people, it's like almost like a bank. I mean, we discussed this when Eric from Investing Sucks came on the show. And yeah, Starbucks is kind of like its own bank. It's you go to Starbucks, you can pay right on the app. There's no interaction with Venmo. And a lot of these businesses, they can build a lot of these product suites in-house. But I'm more actually concerned about the banks and big tech. Big tech coming in and kind of disrupting this. And actually, I am a huge believer that Meta is going to be doing this with WhatsApp. WhatsApp is going to become sort of like somewhat of a banking platform in the future. So I think of like if you actually go to China and then you see something like WeChat, or you talk to someone from China and you take a look at WeChat, that's basically what I imply that WhatsApp can very easily become. All right. But on that note, that pretty much covers it. The risks, again, are with the competition, with the fact that this business is kind of driving itself to the bottom. That's the type of business that it's in. So you have to think about that. Investing is very nuanced. You have to take a look at these things. These are very important facts. Right? These are not assumptions. These are facts. Now, if all those things, you look at them and you're like, all right, I agree, and it doesn't change my thesis. These prices, I can see someone making a reasonable choice to start a position here. I could see that, right? I don't think it's insane. I don't think it's out of the ordinary. I don't think it's, without reason. Okay, I think at these price points, it's fairly okay. All right, on that note, guys, thank you guys so much for watching, and I'll see you guys on the next one.